better to look for wait and watch because this is just bounce back move. So as of now, if you ask me only one or two counter in IT, I'll focus only on persistent system, Coforce or Oracle Finance on the lower levels. And it would be better to wait and watch and let the entire IT sector to get the settle at lower levels.
Okay, so that's with regards to a few of the IT names as we speak. But apart from IT, I mean, if you have to look at markets right now as well, Adani Ports, Bharti Airtel, Apollo Hospital, Coal India, Tata Steel, Hindalco, two from the metal names which are seeing some moves. There is still conviction, Parag Bhai, when you talk about metal counters as well. I think yesterday or day before, HSBC also came out with a note saying that the first half of FY27, at least there will be that momentum that could continue. But with the surge that we've already seen where valuations stack up, do you think it's still a good bet to look at metals as a fresh start?
So I have always maintained that Hindalco and JSW Steel remain my favorites within the metal pack, and within that right now at this price, or say I would say 3-4% lower, JSW Steel is still a buy according to me, not because I am expecting a big rise in steel prices. In fact, steel prices have moderated a bit, but just because the company's execution is phenomenal. They are adding 5 million tons every year with a capex of only 25,000 crores, which is lowest capex per ton if you see globally, and lowest OPEX per ton, which allows them to make a EBITDA per ton of 10,000 rupees. And they are continuously adding 5 million tons every year. Right now, the capacity expansion plan is to grow from 38 to 80 million tons. So, and the net debt has reduced significantly after this JFE deal. So, I would say that this is a very rare commodity player who is a compounder because of its own efficiencies.
From the commodity segment, let's just focus a little bit on the power segment. Let's just pull out the chart of NHPC. Of course, it's on focus because of the OFS announcement, and that oversubscription amount has also come in. Kush, I wanted to get you on this. A little bit of reversal there coming from the last trading session, and a good momentum is being sustained. Now, of course, channel checks are suggesting that some large, good institutional support is also coming in. How do you see this development for NHPC? And in the medium term, any important levels to track?
Massive period of consolidation. In fact, if I look at it, this has been in consolidation since the October of 2024. Look at the range on this one. If the team can bring up about 18 to 24 months kind of chart, once it sort of dropped off, 72 on the downside and about 85, 86 on the upside. It's been in that range for a very long time. Right now, it's a range play. So if you believe that this range will be respected, you have a favorable risk-reward ratio. So with the stop loss at 72, for higher levels of about 79 and 84, 85, the upper end of the range, you can consider a trade. But like I said, this is more of a range play. So if you do get profits on the higher side, you're better off booking it out rather than holding it for a much longer duration.
The other one, and I think Parag Bhai, you spoke about Tata Motors CV. You publicly stated also that you got out at 490 odd levels. But just that cabinet approval, and we are putting up that story that BS4 trucks, buses could be moved to BS6. That would be a big push. But we are seeing a range-bound move for all these players, for Ashok Leyland, for Tata Motors after Q1. You're seeing that fuel price hike impact possibly having that bearing. But at these current valuations, Ashok Leyland 144, Tata Motors CV also, I think post-listing was at 320, now is available at 360. Anything that you like, at least from the near to medium term?
So it is worth considering for sure. But right now, remember, see, if oil doesn't fall, then there are too many diesel price hikes can still further happen. The under recovery is huge. We have just undertaken a price hike of 7.5 rupees. We require much more. So that will definitely cause demand destruction at the ground level for at least H1. Then H2 we'll see. So that means, again, like I said in HUL's case, the first half there is a challenge. So if you're a short-term investor, you should be careful.
When you mentioned about HUL, I want to talk about ITC as well. That stock in terms of yesterday's session actually fell to a 52-week low. Today as well, that stock is down nearly 2%. And it's actually, there is something brewing over there as well, because you're talking about record levels of 500. From there, it's corrected nearly 40%. I was just seeing this data in terms of NSE's margin trading facility book, where they are saying that the leveraged positions of ITC have actually surged to close to 1,800 crores as of the 1st of June, which is implying a growth of 86% from April 30. Now, if you have to look at the MTF book and the leverage on this counter with the downtake, Chandan, what are charts then indicating?
Yeah, so if you look at the ITC, the trend is negative. In fact, The ITC has been making lower top, lower bottom. The structure is negative, whether you look at the weekly, monthly, daily, or even the lower time frame. If I look at the price behavior of last 10 days, it has seen a corrective move from 315 to 275 odd levels. And we have seen sustained cold writing and shorts are being built and those are rolling from series to series. So as of now, the structure is weak. We have seen huge cold writing at 300. That is the big barrier. But on immediate point of view, till it remains below 288, downside could be seen towards 265 to 260.
So pull out the telecom infra stocks. All of them are seeing a good basket buying. Pull out Sterlite Tech. We have Tejas Networks, HFCL. All of them doing well in today's market. Sterlite Tech, that's the company. It's a buyer. It's not Sterling 2. Sterlite Tech, Tejas Networks. All these are the stocks which are doing well in trade. Do you think the momentum is back, Kush, on this space? Because this has already run up a lot, taken a pause. Again, the buying is starting. Is it healthy for these stocks or is there something else?
Not at all healthy. This is through the roof. I mean, we'll have to create more space on my charts to accommodate the RSI levels, forget the price levels, right? Sterlite Tech is on steroids. So I would completely avoid this. Yes, if you have a position, you should continue to hold. I'm not saying that, you should sell off. The momentum is fantastic. It's still, building on, but massively overheated. No point, trying to chase this now. Already at upper circuit, so you really wouldn't get it anyway. HFCL too, very similar story. The only one that perhaps you can consider as a trade right now is Tejas Networks. Had a meaningful recovery. It's been beaten down quite a bit. So from a positional standpoint also, risk-reward ratio remains attractive. Golden crossover of the 50 and the 20-day moving average happened a while ago. Yesterday you had that 20 and the 200-day moving average golden crossover. Yes, so it's sustaining above some key resistance levels and building on. Maybe something that you can consider from a positional standpoint again. I would suggest a stop loss close to the 515 mark. On the way up, look for targets of about 585 and 600 plus kind of levels. So this is the only one amongst the names that you mentioned that you can consider as a trade right now.
Okay, so that's with regards to Tejas Networks as well. But thank you, Parag Bhai, Kush, as well as Chandan for joining in. Always a pleasure to speak to all of you as well. But moving on, Premier Energies, that company continues to benefit from India's domestic solar manufacturing push, seeing marginal gains of 0.2%. Now, it has been supported by strong policy tailwinds and an expanding order book as well. Before we speak to Vinay Rustagi, Chief Business Officer at Premier Energies, Varsha joins in with more details. Varsha, set this conversation up for us.
Well, a lot of things actually working in favor when it comes to Premier Energies. One is, of course, the recent news wherein MNRE has rejected industry demand for a blanket extension when it comes to ALMM list 2. What does this mean? That now solar projects will now have to use domestically, approved solar cells. Now, onto the business highlights when it comes to this counter, let me talk about the order book, which stands at around 14,000 odd crore, which provides strong visibility for the company. Entire order book is domestic focus and the major execution is expected in FY27 with some spillover in FY28. On the capacity, which has scaled up to 3.6 gigawatt with target to reach 10.6 gigawatt, module capacity is expanded to 11.1 gigawatt. Lastly, on the business strategy front, they are moving towards fully integrated model from ingots to modules, which will ensure the supply chain, and they're also adding new segments like BESS and inverters and transformers.
Got it. Well, thanks so much for that, Varsha. But let me go across to our guest now, Mr. Rustagi. Very good morning to you, sir. Thanks so much for joining in. It's Puneet this side. We've seen, that big update coming in for you, as well as for all players who've already invested so much in the domestic cell capacity. If you can walk us through your timeline of, the current cell capacity, I think somewhere around 3.6 gigawatt hour. How are you shaping that up over the next 2 to 3 years? And what could be the potential benefit essentially from this move? We've seen all companies that have invested early into cells will get a big benefit. But what does it happen for the consumer, for your customer, essentially in terms of cost as well?
Sure, Puneet. Thank you for having me. Good morning. The government announced a roadmap for domestic manufacturing of cells back in December 2024. At that time, our cell capacity was 2 gigawatts, and we obviously took immediate steps to expand our capacities. Today, we are at 3.6. And then we have a state-of-the-art 7 gigawatt plant coming up in Andhra Pradesh over the next 4 months in phases. The interesting thing is that we are investing in latest technologies to basically manufacture products which are best in class in the whole world, and make sure that we kind of meet the demands of the domestic consumers. In terms of the cost for the consumers, so I think there are many segments in the market. The two segments being residential rooftop solar and Kusum program, they already have been using domestic cells as per the government mandate. So for them, there is no increase in cost. Then you have the corporate segment, which now has to use domestic cells from June 26 onwards. For them, I would expect the total increase in the project cost to be about 10 to 12%. But then on the other side, they do get some advantages in terms of more stable supply, more stable prices, and obviously no forex risk. And then there is the third segment, which is the utility scale segment, where the domestic manufacturing mandate applies to them only in about 2 years' time. So for them, as of now, there is no cost increase.
Right. Good morning, Vinay. This is Sharad here. Just wanted to understand a little bit on the policy support front. Varsha had clearly mentioned about ALMM2 scheme for the cells, which are already active from 2026. What are the key timelines, how things get benefited, and by when we can see that in your numbers?
So I think, Sharad, thank you for the question. We're already seeing that benefit coming through the numbers. As I said, ALMM2 has a phased timeline. It has already been applicable to some of the market segments. It is now becoming applicable to the corporate segment, and it will become applicable to utility scale projects in about 2 years' time. So, in terms of, we are seeing that impact coming through in form of demand. The demand for domestically made cells is expected to more than double from last year. Last year, we expected demand at about 16 to 18 gigawatts, and this year it should be about 30 to 35 odd gigawatts. So as a result, all the companies who have invested early into the business are going to benefit from increased demand and better pricing outlook.
Got it. And Mr. Rustagi, just in terms of what you mentioned as well, that you will be going back into backward integration also for ingots amongst others. So just a quick question firstly on what is your current bill of materials that you're already addressing with the integration of cells in your complete project, I think over the next year or so. So if you can give us a timeline by 27, what is the integration that you expect to reach in terms of capacity, and by 28 also, because you will be going backward, it will also help you save a lot of cost. So how much of the bill of materials is already being addressed from you at this point of time, and what's the timeline maybe by this year end and for the next year?
So if you look at purely the cost of production, today we are making cells in-house. By 2027, we will be making ingots and wafers in-house. We also have a plan to make aluminum wafers from the start of next year onwards in-house. And together, these three components will account, I would say, for about more than 50% of the total module cost.
And also in terms of, as we see the projection as well, because of course your module capacity has also shaped up very well. Are you putting in any numbers for growth in terms of what's the expectation on the revenue side for this year and going into that? Do you feel that because there'll be a lot of cost, as you mentioned, escalations amongst others that we are seeing this year. So what should we expect for margins for you?
So, let's look at the top line first. I mean, I think the outlook for the solar sector remains very bright. We have seen demand grow by almost 90% last year. And with the current war going on, with the fossil fuel prices at near all-time highs, I think the government is having to rethink the whole energy mix and with a more emphasis on renewables coming through in the coming years. We also see a lot of demand upside from new segments like green hydrogen, data centers, and electric mobility, electric cooking, etc. So I think the demand is expected to grow, I would say, by something like 8 to 10% per annum over the next 5 years. In terms of the pricing, so as a company, we don't give out any future guidance, but as we discussed, our emphasis as a company has been on capacity expansion, vertical integration, and obviously venturing out into the new segments as well. So, we endeavor to remain one of the largest, most integrated companies in the sector. and that we believe will put us in a very strong position when it comes to the future growth of the business.
Okay. Vinay, good morning. This is Hiral here. My question
Hi.
to you is now, if you're looking at the DCR, that's the domestic content requirement surge that will happen on the back of the ALMM2 extension. If you have to look at Q1 and Q2, what is that fresh order spike that could be expected in terms of DCR in this first half?
Sure. So, it is important to understand, like I said earlier, the only change that is now coming in the immediate run with implementation of LMM2 is basically for the corporate projects. The corporate projects which were using imported cells before June this year now have to use domestic cells. That segment alone is worth an estimated 15 gigawatt per annum. So in terms of quarterly demand, that's about 3.5 to 4 gigawatts. A lot of these customers are now going to actually scale up their programs given the high cost of conventional energy. So we would expect about 4 to 5 gigawatts of demand coming through on a quarterly basis.
And if you have to look at the order book as well, I mean, over 14,000 odd crores, 2/3 is scheduled to be executed in FY27. So if you have to break that up in terms of the margin profile of these orders, picking up from what Puneet spoke to you about, how much of this is going to be your high margin domestic cell orders versus your assembled modules?
So yes, so we have said basically, I think about 56% of our order book is in the form of cells. The rest is a little bit of that is DCR modules, but most of that is the remaining part is non-DCR modules. So I think it is well understood that in the DCR business and in the cell business, the margins tend to be much higher because there is a focus on domestic manufacturing. And most of our order book will benefit from these high margin products in the order book. So our margins as a result of that should remain in the visible trajectory over the next 1 year.
And in terms of the capex, Vinay, my last question to you is, what 12,000 crore outlay is what we are looking at, 5,000 earmarked for FY27. You have tied up with IRDA for debt, you have IPO proceeds as well, but an additional enabling resolution of 5,000 odd crores is what you're seeing. Will that actually require a near-time equity dilution if internal accruals face working capital stress?
Sure. So, our CapEx program is actually fully funded through, as you said, IPO proceeds, internal accruals, and the debt, most of which we have already tied up. So as it is, as we sit here right now, there is no plan to raise any more monies to fund any of our existing projects. The resolution that we have passed is basically an enabling resolution to give more flexibility to the company, because we are looking at lots of growth opportunities both in India and abroad. And should any of these opportunities materialize, then obviously we will look to raise more money and may approach the market at the right time. But at this point in time, we don't see any specific need in terms of quantum or timing.
And just one more, Mr. Rustagi, as well, because what we've seen in terms of cash flow as well. I think FY26, I think before FY25, of course, your capacity was also much lower. So that capacity expansion has happened in FY26, expected in 27 and 28. So you turned on a net cash flow basis, roughly around 1,700 crores negative. Is the expectation that the next 2 years, given the investment phase, also will be similar? And any guidance in the medium term that you can give on cash flow? Do you expect that from FY29 onwards, you feel that those investments will start to generate that cash outflow?
See, as you can see, in terms of the existing operations, we are already generating a lot of cash. Our cash flow to PAT conversion was 87% last year. And that is obviously all going into funding the growth of the business. Now, in terms of, how does it kind of play out going forward? Yes, obviously, the cash accruals will only increase as we increase the capacities and production numbers go up. But I also said, energy sector is a very interesting space, particularly when it comes to energy transition and some of the green energies. There are lots of growth opportunities. So I think we will be investing and continue to invest a significant amount going forward to basically strengthen a position within the solar sector, as well as venture into adjacent technologies and product segments. So I think it is difficult to give you an exact kind of guidance, but I do see a lot of the cash that we generate being redeployed in the growth of the business.
Vinay, for that, and a very interesting take coming on how the cash flow usage and the policy up moves are going to help the stock as well. As stock also we see it's largely at the day's high level, if you can just pull that out as well. But moving on from this, fresh SIP additions have slowed and stoppages are rising. But overall account levels remain stable, signaling that long-term retail participation and faith in systematic investing still holds firm despite near-term volatility. Mahima is here with more details. Mahima, what is this data talking about?
Right, so Sharad, what's happened is that the fresh SIP registrations did hit a 3-year low when the last AMFI data came out, and this is on account of many investors stopping their monthly SIP on the account of the way markets are right now, and the SIP stoppage ratio is also rising very fast. Now, if you take a look at the number of discontinued SIPs from 23 to 24, that is FY 23 to 24, it was at around 224 lakhs. Now this has increased to almost 679 lakhs in 25-26 FI. In terms of total number of SIP accounts also, Jan 26 it stood at around 1029 lakhs, which is which has been at that 1044 lakhs mark since the last 3 months. So that's not essentially increased as well. In terms of number of new SIP registration, Jan 26 it stood at around 74 odd lakhs, which has come down to 50 lakhs in April 26. So that number has significantly come down in the last 6 months itself. And SIP stoppage ratio also, if we see, that's increased from 52.4 in FY24 to almost 101 as of April 26. Now, this also needs to be looked at from a perspective that SIP is just a tool, right? Because if we take a look at how benchmarks have done versus the normal funds that have performed. For example, if you take a look at Nifty 100, in terms of 1 year return, it's negative 2.7%. But at the same time, quant large cap, which benchmarks Nifty 100, has given a return of almost 6%. Similarly, small cap 250 has given a return of just around 1% in the last 1 year. But something like a Motilal Oswal small cap has given a return of almost 10%. Nifty 500 has given a return of around negative 0.8% in the last 1 year. But at the same time, quant flexi cap, which benchmarks the Nifty 500, has given a return of 11%. So I think this part needs to be considered, that it's not, SIP is just a tool, and, considering as to how the markets have done, these mutual funds benchmarking those, indices have done pretty good as compared to where they stand. So this is the overall view of what's happening with regards to the SIP flows.
Okay, thank you, Mahima, for that. This is a very interesting data point at a time when the FIs are selling out. The conversation all this while that we've been having is that the DIIs and it's the retailers who are coming in as a good support and strength. Mohit Gang, co-founder, CEO at Moneyfront, joins in. Mohit, good morning. Welcome to the show. This is Hiral here. My question to you is, what is this data actually indicating? Because your SIP additions are indicating that there is hesitancy amongst your retail investors to actually commit money at this point in time, given the way volatility has been creeping in terms of Indian markets. So is it that the new cash is hesitant? Is it that people are probably making budget adjustments as well right now to say that let's sit on cash and not spend it out or not invest it right now because we don't know what the situation is going to be ahead? What is the sense that you're getting so far on the back of the data?
Hi, Hiral. Morning, and thank you for having me on this. Look, I think there are multiple factors which are leading up to this kind of a SIP stoppage ratio. So there is no doubt, we can't deny the data that matured and closed SIP numbers have been higher in April than the new SIP additions, right? So the data speaks for itself. Even the month of March was not particularly good. I think the ratio was almost around 100% in that month also. Now, the number of factors which I was alluding to, number one, obviously, there is an AMFI reconciliation which is happening around the data itself. So there is a lot of mismatch historically around the data. A cleanup exercise has been underway for a pretty long while. I think a lot of cleanup has happened between the months of March and April. And number one, that is reflecting in the data. B, obviously, you can't take away the fact that Indian markets for last 2 years haven't done anything much, and we've just been trading in a range. And obviously, the new set of investors who have joined in last 2 years haven't seen much returns coming from SIP, and there are a little bit of disillusioned. I would not say that you're seeing mass redemptions. Obviously, here and there, you are seeing some pauses, and you are seeing people questioning the whole mechanism, so on and so forth. And perhaps that could have led but I don't think so. That's the major component of the SIP stoppage ratio, because we have seen over a period of time that Indian investors have matured dramatically, and the cross flows kind of verify that fact when you see that the number remains static at around 31,000, 32,000 odd crore mark in terms of gross flows. So that's point number 2. Point number 3 is that during the month of March and April, there is a lot of rebalancing which people do in their portfolios. There are a lot of shuffles which happen. People try and see what has worked well for them in the last few financial years. They want to plan for the next financial year. And there is when you see a lot of old SIPs getting closed and new ones getting booked, perhaps not in the month of April immediately, but those numbers start hitting from June onwards, right? So my sense is there is a lot of portfolio rebalancing happening at advisor levels, distributor levels, and investor specific levels to kind of realign their portfolio to the new world and new reality. And my last point on this, Hiral, is that obviously you've seen inflation spiking up across the country. Crude prices are soaring, and so is the cost of raw materials and inputs and a lot of other things. There is a little bit of uncertainty around jobs, right? So people perhaps are saving more in safer instruments, kind of building that safer nest, right? And maybe shoring up their emergency corpuses around different kind of mechanisms, and perhaps not so much in SIP. So that could again be a minor factor, not the major one. To me, the major factor is the AMFI reconciliation exercise and the annual portfolio readjustments which happen around the closure of financial year.
Good morning, Sharad here. I just wanted to understand in a very simplified manner, seeing how much volatility is happening in today's equity markets also. The newcomers who come in the markets in the mutual fund industry, they haven't got any returns as yet. They are moving to other asset classes also. Just wanted to understand, if there's some newcomer in the market, he has 100 rupees in his pocket. How much does he allocate to equity, debt? How does it actually play out at the current levels?
Sharad, look, honestly, I think there is no bullet answer to this question. There is no simplified version of this entire thing. Obviously, it will depend from investor to investor, their profile, their tolerance capacity, the kind of time horizon they have, and the liquidity requirements, right? Keeping everything in mind, I think we currently are overweight equities, meaning to say that because of consistent underperformance in equity and the valuations having reached a reasonable level, we think it's time for investors to kind of go a little overweight on equity from whatever their asset allocation is. So consider an example that you were running a 50-50 debt equity portfolio. Perhaps now it's the time to go 60, 65 or even up to 70 equity, right? And take a little step away from your fixed income portfolio. Fixed income, of course, on the longer duration end hasn't done well. And with the expectations of interest rates rising, we are a little underweight on the long duration fixed income portfolio, right? So you take off a little money from fixed income, park a little extra in equities. But again, as I said, there is no fixed formula. If you were 50-50, go 65-35. If you're already 60-40, go 70-30, right? So it will have to be adjusted. But yes, the time is ripe and perhaps pertinent for you to go overweight on equities gradually, stepwise. We don't see any miracles happening in next quarter or 6 months perhaps, but with a 2 to 3 year perspective, I think that's the place to go.
Okay, so, that's an interesting take there, but the trend from here on is going to be, important to watch out for as to what SIPs are doing, because if the retail money is getting stopped at some point in time, that will be concerning to some extent as well for the markets in terms of flows. But thank you so much, Mohit, for joining in. It's always a pleasure to speak to you. Moving on, an important development where the government of India has actually nominated 29 non-official members to the Board of Trade. Now, this will be reconstituted Board of Trade under the Ministry of Commerce and Industry, and the reason why they are doing this is mainly to boost manufacturing and exports. This will be chaired by Union Commerce Minister Piyush Goyal, and this is a high-powered advisory board which has been brought together, and they've got leaders from top corporate houses, tech firms, and financial institutions. You can see the entire list as well. Your financial and advisory services, you have CS Sethi, State Bank of India Chairman, and Rajiv Memani, EY India Chairman and CEO. In terms of tech and electronics, you have Virat Bhatia, Apple India Managing Director, and Sridhar Vembuzo Corporation co-founder. From the automotive and aerospace division, you have Anisha, M&M, and Shailesh Chandra of Tata Motors, and Pawan Goenka, who will be in as well. And you have Parth Jindal for core industry and infrastructure. So this is going to be an important development from the way the government is looking at it as well, to discuss strategies to enhance manufacturing and exports. Don't you think, Sharad and Puneet?
Well, yes, of course, manufacturing, Puneet tracks it, and especially looking at the way that defense is there, there's manufacturing, especially coming from Bengaluru and Hyderabad corridors. It seems quite nice, and today itself, Equus also came out with an announcement.
Well, most certainly. And I think we've seen all auto companies, I think we've discussed that the amount of capex that are putting in, you will need a lot of representations from these personnel, especially from likes of Shailesh Chandra, Anisha, into the board, of course, to give us that perspective of what could lead the production as well as the growth in the next 10 years for the automotive sector.
Yep, absolutely. So let's see what comes out of this entire committee that has been set up as well. But moving on from the Morgan Stanley Investor Conference, one of the interesting speakers that we have today with us, Jonathan Garner, Chief Asia and Emerging Market Equity Strategist, who's joining in to talk to us about what he actually thinks of the FI perspective about India et al. And the impact of the West Asia crisis. Jonathan, good morning. Welcome to the show. You know, my question to you is, with India's lower strategic commodity reserves, which are absolutely relative to China or Japan, at what threshold of global oil prices would you actually consider moving India back to an overweight position, because you've recently downgraded India?
Well, the most important thing, as in any call that we make on markets, is what's going on with earnings and what's going on with valuations. I do want to stress that the earnings outlook for India is pretty constructive. We've got around about a 15% EPS growth on a 12-month forward basis, and valuations are a little below 20 times forward P, and that's down from peak multiples. But the issue is not really India, it's what's going on elsewhere. And in North Asia, we have completely spectacular earnings growth. For example, in Korea, something like 230% year-on-year earnings growth this year, which I think will be a record for any emerging market. We're probably looking at 30% plus for Taiwan. And again, Japan also very strong. And so what's happening is that on a relative basis, you're getting allocation away from markets like India and, in fact, South Asia more generally into North Asia. And even though North Asia's outperformed dramatically this year, this will be the second year in a row that Korea is performing very strongly, the forward PE multiples are actually in some cases lower than they were at the start of the year, because the earnings growth environment just continues to improve.
Okay. Jonathan, with sticky inflation, with the impact on oil, where do you see the highest risk of EPS contraction happening?
Well, again, it's certainly true that if you look at it across the whole world, a high oil price environment is more negative in aggregate for Asia than it is for Europe or for the US. But again, there's a North Asia versus South Asia thing going on here. Some of the countries that are most negatively impacted by a structurally higher oil price are in South Asia. It's not to say that North Asia doesn't have oil import needs, but there are much bigger strategic reserves of oil and gas in some of the North Asia geographies, and that's helped them be somewhat more resilient so far. But you're right to identify the oil price as a big swing factor, and were the oil price to fall back in the second part of this year, that would certainly be helpful from a balance of payments perspective for India and other countries in South Asia.
Okay, so Jonathan, the question then is, with FIs moving out, how are they perceiving India at this point in time? Because that is a concern that India is looking at.
Well, actually, if you look at the FII outflows, they've obviously had to be matched by SIP buying domestically in India. But really, you can date the FII outflows to really the third and fourth quarter of 2024, and then they picked up in 2025 and so far this year. So it's about a sort of 18 months, maybe going towards 2-year phenomenon now. And it's related to my answer to your previous question. It's to do with when some of these structural themes around very strong capex in relation to AI, but also defense spending on energy and other thematics began to become much more central to investor portfolios. And they became much less interested in long-term consumer-centric themes within Asia and things that are more adjacent to the consumer, like the financial sector. And so in markets like India or indeed Indonesia or a market like the Philippines that are very skewed to consumer and financials, you've had this tendency for foreign capital to be withdrawn. And where you're much more skewed to upstream capex-related names, which is the case in Korea, Taiwan or Japan, that's where you're getting the strong foreign investor inflows.
Okay, so that's with regards to investor inflow. Now, the AI tech boom, are they still safe in terms of retail investors, or are you saying that valuations are becoming very expensive and risky if someone has to actually look at the AI tech boom and the play around it?
Well, we are talking about semiconductor names in particular and the memory sector, which is exemplified by the 2 largest market cap stocks in Korea. And more broadly than that, we're finding actually that CPUs are increasingly used in the AI technology innovation sphere. And that creates a much broader array of stocks, particularly in a market like Taiwan, that investors can get engaged with. And I do want to emphasize that as far out as we can see, this likely continues. So we do have a strong environment, not just for 2026 on this thematic, but through 2027. And it's early 2028 at the earliest when we might see a fade in terms of the growth rates that we're getting in the upstream capex sectors related to AI.
Okay, so that's with regards to where AI goes. Now, overall, if you have to look at investment bets in India and your view on consumption, what would you put your bets on?
Well, we are negative on consumer really across the board. Even in parts of North Asia, the consumer is struggling in the face of the energy shock currently. So actually, we much prefer capital spending names, of which there are some significant large cap names in India that are oriented to defense spending or energy capex, which is ongoing here. The missing piece is the lack of large listed semiconductor stocks, which are just not present in this market. So anything that's capex related is a key thematic for us. Our economist, Upasana Chacha, is talking about India's investment to GDP ratio rising to 37.5%. And it continues to be a very strong story that the public sector has been like enabling of capex in general here in India. So it's finding those names which are relatively limited within the overall index weight to invest in India, whilst being cautious around the consumer, financials and the traditional IT services or downstream names that are affected by the energy shock.
Okay. So, Jonathan, my last question to you then is, if you have to look at what's happening across the globe, West Asia crisis, with the way FIs are behaving, what's happening to emerging markets, what are your key monitorables over the next 6 to 12 months?
Well, it's really about the earnings growth story, which we've already discussed on this interview. So from the beginning of the year, if you look at the earnings revisions breadth and how that's evolving, it's just continuing to strengthen in industrials, semiconductors, memory, upstream energy, to some extent materials, areas like copper, and it's continuing to weaken in all geographies around the consumer. It's quite a significant dispersion in revisions breadth that's happening on a pan-Asian basis, and everything really flows from that in the way that we look at investment. And the path back for the consumer, it'll be partially driven by what's going on with the oil price, but it's also driven by by policy and by the underlying sentiments of households themselves in Asia. It's worth remembering that this technological innovation, AI, is essentially driving capital returns, and it's starting to create a situation of uncertainty in relation to the labour force, which is affecting consumer behaviour as well.
Okay, so, I mean, India, that becomes a problem right now in terms of emerging markets as a whole. But thank you, Jonathan, so much for joining in. Always a pleasure to speak to you as well. Jonathan, it's interesting to see the conferences which are happening right now. They are seeing a lot of interest from BofA to a Citi to a Morgan Stanley. The commentary is also very interesting, where they're still not really upbeat, but they're not very negative as well when you talk about the earnings commentary.
Already a lot of sell-off has happened, and now I think they are looking at some pockets. Some of the foreign broking houses are bullish, especially on the small cap, mid caps. Other are still cautious. So it's still mixed cues coming in. Right now, just the earnings season has been over yet. So of course, we'll be tracking all of these important, foreign broking houses, important days, and how India's growth story actually pans out. Also, artificial intelligence, global capital flows, all will be getting discussed. And there is Citi India's Conference 2026, which is getting kicked off in Mumbai today. Now, this is a flagship event. It's set to bring in global investors and policymakers representing companies with a combined market of nearly $1.8 trillion. Now, to get in more details, what's in store from it, let's go to my colleagues, Riddhima Bhatnagar and Nimit Dikshit. Guys, a lot of important news flows coming in, a lot of important foreign broking, you could say, events are happening. Now, what's new here?
Yeah, absolutely. Riddhima and I are here. It's quite a bustling and busy event already. Like you already said, a market cap of about 2 trillion, close to 2 trillion is in attendance here today. We're looking at the world's top investment houses. We're looking at the world's top bankers, top policymakers, and top AI and financial experts. What I'm looking forward to most is Sergio Gore, the US ambassador to India, will be in attendance today amid trade talks that are going on in Delhi. We'll be tracking that live. Also really looking forward to the SBI chief CS Shetty, who will be delivering the keynote here today in a short while from now. That should be very interesting. Former IMF chief economist Geeta Gopinathan is here, and she'll also be talking to Jane Fraser, the Citi global CEO, who will be talking about Indian banking with the globe and how capital flows have been changing in India, a topic that's been hot. Riddhima, can you tell us a little bit more about what's happening on the company side and the investors?
Absolutely, Nimit. So in FMCG space also we're seeing big names, Harsh Mariwala of Marico, then you have Nestle's Manish Tiwari, Apollo Hospitals, Sunita Reddy also lining up for the event, and they will be discussing how the global disruptions have happened and how the boardroom talks are happening. And not just this, to discuss geopolitics and supply chain disruptions, we also have JSW Steel's management and also Mahindra's to give us more on that. And even in the AI and the deal space, Nimit, what is the lineup?
There's a lot going on there. Importantly, the AI space, the AI India play will be discussed here today, and it will be discussed by the people that seem to be exiting India, the foreign portfolio investors. Temasek is here today. Norges, the world's largest sovereign wealth fund, is here today, and it's going to be a very important panel. We're going to see how this goes through, and we'll keep you updated on what's coming.
Okay, thank you, Nimit and Riddhima, for that. We are looking forward to a lot of conversations that you will be bringing for us from the Citi conference on the sidelines as well. But yes, your offline conversations will be absolutely more important than what actually makes it everywhere. But we'll quickly slip into a short break. On the other side, we'll speak to Amisha of Bank of America. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems genuine.
Welcome back to India Market Open, and of course let's just check the markets. Big reversal here coming in the IT space, and a lot of analysts had stated about this reversal happening because the structure was not strong. Let's pull out the Nifty IT index to see which stocks are falling in trade. We have of course the Nifty big heavyweight stocks falling in trade. TCS, Persistence, Tech Mahindra, Coforge, all of them down more than 4% in the trade. And if you just pull up the broader indices also, no major support is coming in as well if you get the mid cap index or even the small cap index. So of course it's a muted day of trade as well. But to understand more from the perspective of India, emerging markets and globally, where does India stand, we are joined in by Amish Shah. He's the head of India Research at Bank of America Securities. Good morning, Amish. It's always a pleasure to have you. In your India equity strategy report I was reading, interesting take has come is that Nifty still overvalued on earnings versus bond yields. Now, what does this mean, and why, when do you think, if correction goes on, the valuations turn favorable on that?
Sure. Hi, morning, Sharad. Thank you for having me. So look, valuations you can look at in multiple ways. One of the way is obviously the comparison of Nifty versus its own history in terms of valuation. There we could argue that India has become reasonable in terms of valuations. The second is to compare India's valuation to emerging markets, where adjusted for growth, India still continues to be one of the expensive markets. And the third comparison is to compare it with the other asset classes like bonds that you mentioned. Given that the bond yields have gone up, and equities is always a premium over what you can get over the bonds. So relatively speaking, equities are currently expensive in comparison to returns that you could possibly make from debt markets as well. So that's the context. Having said that, we do think that if you are somebody who is invested in Nifty, there is a possibility that from current levels you can make about 10% rupee returns. So as a foreigner, maybe the returns will be lower on the back of rupee depreciation, but a single digit kind of dollar returns is still possible from Nifty in India.
Okay. Amish, good morning. This is Hiral on this side. My question to you then is, you're talking about where valuations stand in terms of Indian markets. However, if you have to look at the FI positioning as well, they've continued to remain sellers. Now, what factors, according to you, will actually get them to turn buyers in terms of Indian markets? Because the other concerning area I have right now is the SIP data. The SIP is on a reduction path right now. So there is the retail investor also who's probably losing that kind of interest right now.
So Hiral, as far as the FIIs go, look, I never believe in that argument that just because FIIs are underweight India or they have sold a lot of Indian equities, they therefore will come back to the market. That I think is a lame argument. Foreign investors will go where they find returns. As of now, adjusted for valuations and growth, as we were discussing, returns are much more attractive in the AI markets of Korea, Taiwan, Even Brazil is a commodity market and commodities are all doing well. So I think right now they find alternative markets which are more exciting, and therefore foreigners are very hard to come back in India at this point in time. As far as the domestic investors or retail investors go, the risk of SIPs coming off is a really big risk, because going back to the valuation argument that we were having, ideally in the context of where earnings growth cycle is for India, there is a reason to believe that India should be trading at long-term averages or maybe a shade lower than long-term averages, because corporate earnings growth is run rating below the nominal GDP growth of India right now, as far as the large cap Nifty 50 companies are concerned. So the only reason where the valuation multiples have held up right now is on the back of domestic flows, and if that starts to crack, then valuation pullbacks are very likely.
Amish, if that happens, what are you then baking in according to you in terms of valuations and where markets could go? I mean, let's look at the worst case scenario.
So we have drawn these as scenarios already. So we have right now, unfortunately, there is no bull case for India. So we have a base case, we have a bear case, we have a worst case. The base case, as I said, is about 10% returns where domestic flows continue. Valuations give you no returns from here, but the market compounds in line with earnings growth. Earnings growth, we are talking about 8.5%. So broadly, 10% returns is what you can deliver in the base case. In the bear case, earnings growth still continues to be 8.5%, but on the back of the domestic flows coming off, valuation multiples will go lower than the long-term average multiples, more closer to -1 standard deviation, in which case we are talking about a 12% downside from here. And your worst case, builds in the risk that the Iran conflict drags on beyond June. So currently in our base case, we have assumed that by the end of June, the conflict comes to an end. But if it drags on for longer, then commodity prices, supply chain issues, they just persist. That pulls down your earnings growth, from 8.5% more closer to flat earnings. And it could then be a combination of weaker earnings combined with even weaker multiples. That we hopefully, we hope that we don't get into that situation really.
Weaker earnings, weaker multiples, and hopefully India should not get that. But moving on from this, Amish, which are the sectors there will be a preference right now? Of course, the first half of FY27, we all will be impacted because of the higher costs or the inflations coming. But in this scenario itself, which sectors do you think will do well, or the preference would be good here?
We have bucketed them in terms of either themes or whether there is value or there is a visibility of growth. So I think from a thematic perspective, the theme that we like the most right now is energy security. Clearly we would agree that this is not an India conflict. This is somebody else's conflict, but India is getting impacted because of its imports of energy. So what can we do over time to localize energy within India, or to have your own energy replacing the imported energy? There we think that there are a variety of solutions. Obviously it will take time. It's going to be a multi-decade theme if we start from a policy action perspective, but there could be biofuels, there could be electrification, we could do more deep water oil and gas exploration, there is coal gasification, so there are a variety of themes and stocks linked to that ecosystem, including power financing companies, power generating companies, power transmission companies, even the coal manufacturers, the cables, wires, those kind of ecosystem players, so that is one pocket that we find exciting on the back of a theme playing out. We are also excited about the shipbuilding sector in India. That's a space where you can generate a lot of employment, and the market shares are going to move away from the existing hubs of China, Korea and Japan, because population there is aging. So that's another theme that we are quite excited about. So that's one bucket. The second bucket is lapping up to the global themes. So if globally there is AI which is doing very well, what feeds into the AI ecosystem is commodities. So things like aluminium stocks, copper stocks, again cables and wires, transformers. So those are the kind of stocks that we think will do well. Linked to the global growth story, and then coming to the value bucket, we do think that certain utility companies, both power and gas, plus telecom, plus hospitals and pharma, is something that we are excited about. And then finally, within the value, we will also put in the financial space, which was always value, and because of the West Asia conflict has become even cheaper.
Those are interesting sectors, Amish, that you're mentioning about. But I was just looking at BOFA's trajectory in terms of what they're expecting from the RBI. The house view is a cumulative 50 basis point interest rate hike for FY27 as a whole. With the way things are panning out, you have the policy which is just slated in the next couple of days. How severely will this macro tightening that we're looking at pressure the domestic cyclical sectors as well, if you have to look at real estate or even for that matter auto, because the view in terms of auto is very different. Auto and auto companies, if you hear their commentary, absolutely bullish when you talk about FY27. Yesterday I did meet the management of Maruti, where they were indicating that EV and CNG sales have been spectacular in the last couple of days in terms of bookings. So there is that divergence in terms of views that is coming in from what the macro could look like, what it could look like on the ground, and what corporates are talking about.
Absolutely, Hiral. So interest rates is obviously one factor that could lead to growth slowing within the auto space. The other is the commodity, cost inflation, which can impact the margins for these companies. Look, a large part of the GST cuts from 28% to 18% that we saw around Diwali last year, a large part of that benefit is gone, and the residual is likely to be gone very soon if companies will have to take price hikes in order to offset the commodity pressures. So you are right that the outlook currently for autos is very good, but we do think that the outlook can moderate on the back of these issues going forward. But specifically within the autos, the EV theme that you spoke about, or the CNG that you spoke about, I think that will see further acceleration. And we are already seeing early signs where EV cars or EV capacities are now facing supply side challenges. So companies are already talking about adding more capacities there. So we do think that two-wheelers, commercial vehicles, the conventional ICE technology, passenger vehicles, those can be vulnerable to commodities and rate hikes, but the EV side of ecosystem can actually accelerate from here.
Okay, so it's going to be interesting to see how things develop as well. But thank you, Amish, so much for joining in. It's always a pleasure to speak to you as well. But moving on, SBI Chairman C.S. Setty delivering opening keynote at the City conference. Let's listen into what he's going to talk about, because here he's talking about the resilience that India has in terms of the geopolitical issues. Let's listen in.
To many of the students, millions of students those days. Today, I'm very proud to say that India is surplus in the food grain production. And India has established itself as the fastest growing major economy in the world. But the most remarkable aspect of India's rise is not simply the pace of growth, it is the ability to deliver transformation at an unprecedented scale. And throughout this journey, the banking sector has been far more than a provider of financial services. It has been a critical partner in nation building. The most distinctive feature of India's developmental journey has been the creation of a world-leading digital public infrastructure. I think you're all familiar with the DPI, JAM Trinity. I think they've been spoken quite a lot. But the digital prowess, what India has developed, particularly in the payment space, is amazing. And you must have read extensively that today, UPI handles 200 billion transactions every year. And very proud to say that SBI handles 30% of that volume. If you see the volume of transactions and the capacity what the system has developed, SBI alone handles almost 250 million transactions every day on UPI. and with a technical decline as low as 0.01%. So you need to build in India. If you are operating, you have to build for scale, and build scale which actually creates the flywheel impact going forward. So the JAM Trinity definitely have helped in terms of creating foundation for one of the most ambitious digital transformations in modern history. Banks have played a central role in translating this digital infrastructure to economic opportunity. Social security coverage expanded dramatically from 19% of the population in 2015 to over 64% in 2025. The bedrock of this is what is called direct benefit transfer, which has not only prevented the leakage, it has brought many people into the fold of the benefits what the government has been giving to them. And again, the digital public infrastructure played a very important role to ensure that the DPD is delivered with efficiency and low cost. One of the most other significant achievements in the Indian banking system has been the democratization of access to finance. This DPI and the whole gamut of data availability in India has ensured that the finance, access to finance, the story which I mentioned is no more relevant, when not only the collector, everyone in India has access to the finance today. The microfinance sector offers a compelling example. Today, 95% of microfinance borrowers are women, and nearly 80% belong to rural areas. Over the last decade, the number of active borrowers has increased from 33 million to nearly 63 million. During the same period, the sector's loan portfolio expanded almost sevenfold, reaching approximately 2.5 trillion rupees. So these numbers represent much more than credit growth. They represent women starting businesses, families improving housing conditions, children gaining access to better education, and households becoming more resilient. Few financial inclusion initiatives in the world have combined financial access, social empowerment, and women-led development at this scale. Banks also have played a transformative role in supporting entrepreneurship. Today, large-scale government-supported, non-government-supported, individually driven by the banks are immense. We have adopted digitalization at scale to ensure that SME financing becomes seamless in the country. Consolidated MSME credit outstanding is around 67 trillion rupees, growing at a 5-year CAGR of 17%. The other pillar of India's transformation has been the infrastructure and productive capacity creation.
Okay, so banks and digitization, that's the key right now that SBI Chairman C.S. Setty is talking about delivering their opening keynote at the City Conference. We'll keep getting you further updates as well from our reporters who are there. But very quickly, in terms of markets, before you wrap up, TCS, that's one stock that I want to watch out for, 7.5% downtick coming in. Yesterday, with all the surprises that you were talking about, that when have we seen these kind of moves in terms of IT companies on the upside? It's the actual reverse that has happened today as well.
Exactly.
When have we seen this kind of downtick as well on a single day, right?
I think it's almost a year, I could say, the biggest intraday fall again coming back. It's just reversing. Yesterday we were putting out lines, which was biggest intraday gain, now it's biggest intraday reversals.
Yeah, absolutely. So I think that's what the flavor of the market is right now, but we will get to you continuous coverage in terms of what's in store from here on. Stay tuned. Completely out of time. With that, it's a wrap on India Market Open. Up next is Ask Profit. Thank you for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The Hook.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. And the award goes to
Tamanna Inamdar.
Hello and welcome back to NDTV Profit. You're watching Ask Profit. My name is Puneet Zaveri and with me is Mahima Vachajani, and over the next hour or so, we'll try and solve all those stock related queries. So if you haven't already, do start sending in on the number that's flashing on the top of the screen. You can also call us, speak to us as well as our guest on those stock related queries as well. The landline number for that is also flashing on the top of the screen. But as we look at the markets, yesterday was a good day in terms of recovery in the second half. Today though, on the other hand, you receded back to those levels below the 23,300 mark, and we'll get Vaishali to give us a benchmark view as well. But largely a day where IT is down and out. So you got some indication yesterday, and if you can pull up the heat map, that'll give you that perspective also. The index is down 4.5%, and that's led by the top names as well. So in terms of the index, you're seeing a 7% downtick right now on TCS. Tech Mahindra, HCL Tech, Infosys are some of the other top losers of the Nifty 50 and continues to be under pressure at this point of time. You've also seen some gainers today, but it's largely, as you can see, 41 stocks in the Nifty 50 that are currently in the red. And so we will hope for a similar picture compared to yesterday, where there'll be at least some rebound in the second half from the lows, but very important to track all those key updates. If you also look at the sectoral heat map, we spoke about IT being down as an index, down 4%. You're seeing pressure across the board. So all sectors in the red right now. Realty is down 2%. You're also seeing the PSU banking index down 1.1%. But, as mentioned, continues to be a day that's under pressure. Also, in terms of the advanced decline, though, we spoke about the pressure on the benchmark indices. But in terms of the advanced decline ratio, yesterday you saw a revival in the second half and today, but it's been a down and out day for the broader markets as well. Almost a 2:1, a 3:1 kind of ratio, getting very close to that number also is unfortunately the state of where they are. Mid cap, small cap also reflect that pressure, and also look at the BSE 500 in terms of individual names. So of course, mid cap down 1%, small caps trying to get some momentum, but all those getting sold into at this point of time. In terms of individual movers, you're seeing all the tech names being in red. So you're also seeing Birla Soft, Coforge now down, and Natco Pharma is also down. While HLE, Glasgow, Lakshmi Organics are some of the gainers, but you're seeing almost a 1% downtake on the BSE 500 as well. But let's start taking all your stock-related queries now. It's an important day to get some views in. So let me welcome in Vaishali Parekh, Vice President Technical Research at PL Capital, and Gaurang Shah, as always, Senior Vice President at Geopolitical Investments. And both of you, thanks so much for joining in on this Wednesday morning. Vaishali, just before we move forward, we've yet again broken that 23,300 mark, and we've seen pressure across the board. Are you finding some support at this point of time? Any indication of some up move that we could expect in the second half of today?
Very good morning, Puneet, Gaurang, and all viewers. Yes, market is giving us tough times. Support levels are being challenged. So I would say for today's levels, I think 23,200 is the final crucial support level. If we break this, then we are looking at 23,000 to 22,800. So the bias is definitely corrective. Let's see 50 points here and there, and are we getting a bounce? But the trend continues to be down, even as far as Bank Nifty is concerned. That is also showing, and of course, today, IT sector has been instrumental in giving us a downslide. But I think overall we are seeing good selling coming in almost all sectors. So wait and watch scenario, and stay light.
Stay light, and most certainly, Vaishali, and capturing that momentum also of a downtake. We've seen weather pouring down also in Bombay, and that's actually reflected in the markets as well. It's been a down and out day, to say the least. Hoping for some better momentum going forward. But let me go across and take our first caller for today from Hyderabad, and Sainath is now joining in for a stock-related query. Sainath, very good morning to you. Welcome to the show. What's your query?
Very good morning, sir. I'm holding RVNL shares of 1827 at the price of 331 average. And it's been 4 years I'm holding this. And right now I'm in the loss of around 28%. So I just wanted to know, should I average, or should I hold, or should I sell when it bounces back?
And Sainath, when you bought it, of course, and you've been a patient investor, but did you look at the fundamentals at that point of view, or did you look at the technical, the charts view?
That time the railway stocks were picking. I took up the fundamentals, and then I entered and I averaged multiple times when stock was going up and down.
Got it. Well, Ben, since you are in a difficult position, let me get you both the views. So, Gaurang, very good morning to you. Thanks so much for joining in. If not a direct view on RVNL, because, as a strategy, he's been holding and bought into railway stocks 4 years ago. Unfortunately, it's a bet that's not worked for him. But if you can give him some perspective of what he should do, if not on the stock, on the space, any view?
Thank you so much, Puneet, for having me on the show this morning. Good morning to all your viewers, to Vaishali, and to our entire team. A small disclosure, all recommendations that I'll be sharing with you this morning are part of our fundamental research team recommendation from a long-term point of view. Our company, Geojit, and myself, we don't have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. they might have their investment interest. So, Indian Railways related companies, very often the spike comes into these companies near about budget, because now both the budgets are clubbed together. Along with that, couple of years back, because of the modernization changes, upgradation of railway station, railway tracks, railway coaches, dedicated freight corridors, more networking, connectivity, resolving the last mile issue, most of the railway related stocks were up and buzzing. Of late, I think most of the stocks have gone into a cold storage or hibernation process. Sainath over here has bought in at about 331, if I'm not mistaken, and currently the stock is trading at 235. So there is a huge hit, Puneet, that the investor is taking right now. The future, I'm talking about the sector because on RVNL, or as a matter of fact, we used to cover IRCTC some time back, but our targets price was in place and we have removed the coverage. So currently no coverage. Also on RVNL, we don't have coverage, but the future looks extremely bright in terms of the changes and the resolution of last mile connectivity that the government and rail ministry spark. But this is going to take time because, acquiring land, laying down tracks, getting in connectivity, electrification is also a big theme because a lot of our locomotives are dependent on diesel. And electrification is also a big theme of Indian Railways, which the government is kicking off on a very large scale. But the problem is acquisition price and the current market price. I believe Vaishali would be in a better place to advise over here.
So a view on the charts, because, of course, he's bought it at elevated levels, but is there a revival on the anvil? Would you recommend him to average?
So basically, actually, even we were tracking, the rail stock some time back, and we thought, yes, it will, it was a fair value price. And RVNL also we had recommended some time back. But right now it's in a downward trajectory. And from the recent data, what we see, right from 300, it's been corrected to now 235. So technically, I would say the stock is deep oversold. So maximum erosion, what I can see from here on, could be around 220 levels. So I would say average out at these levels and wait, because when there is a turnaround in this sector, you will get a bounce at least up to 300, 320. So you will better your price in this way, and probably hopefully you should be in gain also. So 220 is a level to watch. Start accumulating from every dip from here to average out your price.
Okay, all right. So that's the view on RVNL. I think we've got Ajay calling us from Ambala. Ajay, very good morning to you. क्या query आपकी?
Good morning, ma'am, and good morning to all the panel. मैम, मेरा क्वेश्चन रिलायंस इंडस्ट्री पे है. मेरे पास 50 शेयर हैं 1362 पे. और मैम, मुझे ये पूछना था, क्या मैं यहाँ पे थोड़े और शेयर ले सकता हूँ, क्योंकि हमारा इनका 19 जून को एजीएम है और एवरेजली थोड़ा सा ऊपर जाएगा तो मेरा शायद एवरेज प्राइस आ जाए. ये सेकंड पॉइंट ये पूछना था. और मैम, इफ यू डोंट माइंड मैम, एनएसजीएल पे व्यू चाहता हूँ. क्या एनएसजीएल यहाँ से ले सकते हैं क्या? ये 800 के आसपास चल रहा है.
तो अजय, आपको चूज करना पड़ेगा. आपको चूज करना पड़ेगा. रिलायंस पूछो या एनएसजीएल पूछो?
नहीं, रिलायंस मैंने पूछ लिया, बट बस वही पूछा अगर व्यू दे सकें कि.
ठीक है, चलो आपके लिए एक्सेप्शन बना रही हूँ इस बार, दोनों पूछ लेती हूँ. एंड लॉन्ग टर्म व्यू से चाहिए अजय, करेक्ट? ये ऑलराइट. गौरांग, वेरी गुड मॉर्निंग टू यू. फर्स्ट ऑफ ऑल, योर व्यू ऑन आरआईएल एंड देन एनएसजीएल. इज दिस द राइट टाइम टू एंटर?
Well, thank you, Mahima. Morning to you as well. If you permit me, can I answer this in Hindi?
Sure, 100%.
Thank you so much. So, प्रश्न पूछने के लिए बहुत बहुत धन्यवाद. देखिए, पहले तो रिलायंस इंडस्ट्री पर काफी लंबे समय से हमारी खरीदारी की राय रही है बुनियादी दर के आधार पर, और वो आज के तारीख में भी बरकरार है. जिस प्रकार से फैला हुआ कारोबार है, पहले तो पुराना कारोबार योगदान देने में सक्षम रहा है. नए कारोबार में से आय और शुद्ध मुनाफों को लेकर के बहुत सकारात्मक भविष्य हमें दिखाई दे रहा है, और जो भी रणनीति कारोबार को लेकर के मैनेजमेंट ने साझा जमीनी स्तर पर रखी है, वो भी हमें लग रहा है कि बहुत बड़ा परिवर्तन. लेकिन इसके लिए समय लगेगा, क्योंकि ये जो पूरा कारोबार है, चाहे वो रिफाइनिंग हो, ऑयल टू केमिकल्स हो, रिटेल हो, डिजिटल हो. और एक बात यहाँ पर ये भी है कि बाजार एक तर्क लगा रहा है कि रिलायंस जियो मोबिलिटी को अलग करके अलग रूप में लिस्ट किया जाएगा, जैसे जियो फाइनेंस को लिस्ट किया गया. लेकिन वो ये भी बाजार समझ रहा है कि इस वर्ष के आधे हिस्से में होगा, यानी कि जुलाई से दिसंबर तक, लेकिन एक तर्क लगा रहा है बाजार, मैनेजमेंट के ऊपर छोड़ देते हैं, उनकी बुद्धिमत्ता पर छोड़ देते हैं कि अब लेके आते हैं। तो अच्छा लग रहा है, बने रहे, हमारी खरीदारी की राय है एज अ डिस्क्लोजर। और अगर आपने ऊपरी स्तर पर लिया है तो ये जो 1300-1310 के आसपास है उसके थोड़ा बहुत नीचे आता है तो आप और भी जोड़ सकते हैं अगर आपका नजरिया लंबी अवधि का है। एनएसडीएल पर आपकी राय है तो पहले तो क्षेत्र पर टिप्पणी करूंगा। भारतीय शेयर बाजार यानी कि इंडियन कैपिटल मार्केट्स पसंद आता है हमें। एक कंपनी जो कि सेवा उपलब्ध कराती है वो है कंप्यूटर एज मैनेजमेंट सर्विसेज, ये कंपनी पर हमारी खरीदारी की राय है। लेकिन आपने प्रश्न पूछा एनएसडीएल पर, तो मेरे ख्याल से अगर मेरी याददाश्त रही है तो जब आईपीओ हाल ही में आया था तब आईपीओ नोट द्वारा हमने लंबी अवधि के लिए आईपीओ में निवेश की राय दी थी। लेकिन अगर हमारी सोच ये कहती है कि भारतीय शेयर बाजार हर साल आपको साधारण 12 से 15% औसतन ऊपर के तरफ के दायरे दिखाएगा अगर आप कंपाउंडिंग करते हैं 3 से 5 साल के लिए, तो शेयर बाजार से जुड़ी हुई जो भी सक्षम और मजबूत कंपनियां हैं, चाहे वो प्लेटफॉर्म प्रोवाइडर हो, चाहे वो सुविधाएं उपलब्ध कराने वाली कंपनी हो, या फिर एसेट मैनेजमेंट कंपनी हो, या फिर इंटरमीडिएटरीज, ये सब भी आने वाले सालों में अच्छा करेंगे।
Got that view, Gaurang, but गौरांग की एकदम सक्षम और सकारात्मक हिंदी पे हम सब फिदा है यहाँ पे। So गौरांग, firstly,
मैं तो क्लासेस ले रही हूँ
classes. I mean, we do get a lot of queries in Hindi, but I think that fiery response across the board, I think it's gotten a smile from Vaishali as well. But very good view. Thanks so much for that, Gaurang. But let's go across. Take another one from Vinay, who's joining us from Pune. Vinay, very good morning to you. What's your query?
Morning. See, I have 2,000 shares of Larsen and Toubro at 3,200 rupees. So I want to partially shift to one or two or three stocks in like semiconductor, data center, AI related. So what would be the 2 and 3 stocks? Because I have an investment horizon of at least 3 years.
Got it, Vinay. And Vinay, did you buy into L&T in the current fall? Because at 3,200, it's a very attractive level. You're also sitting on profits of almost 14 lakh rupees. But did you buy it currently, or have you holding it for a while?
No, I have been holding it for more than 3-4 years.
Got it. Well, firstly, many congratulations. It's a bet that's worked for you. But Gaurang, in terms of he wants to diversify a little bit, is it a good time, firstly, to book some profits in L&T and go into the areas that he wants to?
So Puneet, I have always believed in one thing. Like investing is an art into stock market, booking profit also is an art. And the reason why you invest in stock market is so that your 100 rupees becomes X plus something depending upon the return that you want. I will not give an advice to book profits because we have a positive coverage on L&T. So I would completely leave it up to Vinay. And of course, Vaishali, if she's got an opinion or a view over here. His question, data center, semiconductor. So data centers, there are a couple of investment ideas from our side. Basically providing into the backup part and the infrastructure part, Puneet. So you have companies like Cummins, ABB, L&T, again, is involved into, creating all these backup infrastructure and back-end infrastructure for data center related. For chips and semiconductors, we have coverage on 3 names. Amber Enterprises, CG Power, and PG Electroplast. So Vinay, I leave it up to you and your fine sense of judgment and wisdom. And I hope Vaishali can possibly throw some more light on this.
Sure. Vaishali, any view on the charts?
Well, CG Power and data center, all these stocks are doing very well. So I would continue to have a positive view even for CG Power. In fact, technically also, we have been recommending this stock and I think it's a must-have in the portfolio because this can give very good returns from here. And besides the sectors that he's recommending, I would also suggest capital goods like ABB, etc. He can consider those stocks as well because they are looking quite robust on charts and can give good returns. So yes, I would say have a diversified view.
Okay, all right. So that's the view coming in on all of these data center player names. But time to take a look at the F&O space and the setup, of course, and the queue shaping up. To give us a perspective, we have Sharad joining by as to what the queues are indicating at the moment. Sharad?
Well, it's quite negative cues there, and it's a big stark reversal of the IT stocks, which is there in focus. And let's look at Sensex, what's happening here, and see much of the sell-off. TCS is down 8%, Tech Mahindra down 5%. It's a massive reversal from yesterday itself. Nothing major happening when it comes to gainers also, largely flattish for Trent, M&M and Power Grid. Only Maruti we are seeing a little bit of buying, but nevertheless a big sell-off is there in terms of the markets, and the technical strength is of course quite weak. But what's there in the long build-up? There was a little bit of profit booking earlier in this capital good play, and now the reversal is happening. Nova Transmission and Distribution and Avenue Supermarts also, but not that convincing also. The significant portion has not been built yet. Also short covering, we have NHPC, a little bit of reversal. The OFS subscription is there. Channel checks are suggesting larger institutions have shown interest. And Keynes Tech also, nothing major happening. It's just still in the green. But largely today has been a big sell-off, and you're seeing Sammaan Capital also making it to the list along with the IT stocks. And lastly, let's see the short build-up, and I think it's going to be the IT stocks as well. Just a reversal of what I was speaking yesterday, to be honest. And that's all it is in the FNO space today.
Got the view, Sharad. Thanks so much for that. So IT definitely continues to be under pressure. But take across the next query now, and this one's coming from Sunil Kumar. He is holding on to NHPC, bought at 90 rupees per share, and is currently holding 3,200 shares. So he's sitting at a loss. Vaishali, any view that you can provide him in the near term?
Well, so actually, it's not giving a clarity on trend. But all I can say is that the near-term possible view that I can have is it's holding on to 73 levels as support. And we can observe a range of 73 to 80. Unless and until the stock sustains above 80, it's hard to tell whether are we seeing a good upward move.
All right. The next one that we have is coming in from Sobha from Bengaluru. She's holding 5 shares of Nestle, bought at the levels of 1410. She's sitting on a small loss, wants to know whether she can continue to hold, sell or average at the current levels. Vaishali, I'll stick with you for this one. Nestle, how is it looking on the charts at the moment?
So Nestle had got into an uptrend, and right now we are seeing some profit booking and so some consolidation. But I would say there's no damage to the trend unless and until we see the stock going below 1340. So continue holding, and once we see the stock moving above 1440 levels, it's back on track and you can expect a target of 1500. So in my opinion, hold but with a stop loss.
Got the view, Vaishali. Vaishali, also on Welspun Corp, another query coming in now. This one's from Rakesh from Hyderabad. And he wants to know a short-term view. We did have the management, just a few days ago in the studio, a very bullish commentary in terms of revenue growth expectations. But on the charts, Vaishali, is that following through?
So I would say keep a trading stop loss because, of course, it has shown one-way rally, right? From 800 to now, it's at 1387, quite a run-up. So be cautiously positive. Hold with a trading stop loss of 1340, and this can go towards 1440, 1450. I don't see much of an upside from here on for now.
Okay, all right. The next one that we have is on Britannia. Harsha from Vijayawada is holding around 30 shares at the levels of 5,700. Wants to know whether to add, hold, sell from again a short-term perspective. So Vaishali, I'll have to stick with you for this one as well. Britannia on the charts.
So when it's short term, I won't say add or just keep a stop loss of 5,000 because once again, stock deeply corrected. In fact, if you see the weekly chart also, it has come towards a make or break levels of 5,000. So 5,000 should be taken as a stop loss, and short term view would be hold for a target of 52 to 5,300.
Got that view, but it's now time for the rapid fire round in this edition of Ask Profit. Vaishali as well as Gaurang, you know the drill. Keep your answers as short as possible. The first question coming in on Ashok Leyland. Sanjay from Bangalore wants to know if it's a good time to enter. Gaurang, any view?
Buy for long term.
Okay, the next one is on Kalyan Jewellers, bought at the levels of 373. Continue to hold for the next 2 to 3 years, Gaurang?
Would prefer Titan, no coverage on Kalyan.
Ramesh from Bangalore is holding Pidilite at 1480, Vaishali. Should he continue to hold is his question.
Well, so it's 1452 right now. Keep a stop loss of 1420 and look for a target of 1500.
Okay, 500 shares of Kotak Mahindra Bank is what Ram from Chennai has bought at the levels of 368. A long-term outlook on this one, Gaurang?
Continue to hold for long term, and if you get an opportunity on lower side, you can add as well.
The next question coming in on Shriram Finance. Vaishali, our viewers bought shares at 954. Is it a good time to still continue to hold the stock?
Yes, expect a bounce from here.
Okay, Railtel bought at the levels of 348. Ram from Chennai is holding around 100 shares. Continue to hold for the next 6 months, Vaishali?
So as I said, expecting a bounce in the rail sector, so yes.
Got it. The next question is on Cochin Shipyard, bought at 1715, Vaishali, by a viewer Sudeepto. He wants to know what should he do with his 75 shares.
Continue holding. If time is not a problem, continue holding. Look for targets of 1800 to 2000.
Okay, HFCL 100 shares is what Sriram Raghuraman from Chennai bought at the levels of 53 since June 21. The stock is currently trading at 195 from a long-term perspective. Gaurang, any view? Continue to hold?
Mahima, no coverage. I'll get a pass.
Vaishali, any view?
So technical target is 200. So we are suggesting to book partial.
On Sandeep from Hyderabad has bought into Dalmia Bharat, Gaurang at 1880, and he's holding 100 shares. Wants a fundamental view. I think the quarter 4 results were slightly weaker, but any view?
The numbers were weak, Puneet, no doubt about that. But yeah, given the benefit of lower levels from where he bought, he can hold on to whatever he has. He can add as well from long.
Okay, Bandhan Bank 600 shares bought at the levels of 190. Continue to hold, Vaishali?
Hold for near-term target 220.
Got it. The next question is from, on Irida, bought at 237 by Nikhil. So he's in deep losses on this counter. He wants to know if he should stay on Vaishali or average down. What would you recommend?
So for now, hold with stop loss 118. Average out at around 135, 145 once you get those gaps.
Okay, Kitex Garments is the next one. Krishna Prasad from Hyderabad has bought 400 shares at the levels of 230. Now it's around 160, I believe. Let's try to pull that up. 160, correct. What should he do, Vaishali, on the charts? Should he book his losses or continue to hold for recovery?
No, not in a hurry. Add more with stop loss of 150. This can go towards 192.
The next question coming in now, it's on Bharat Electronics, bought at 430. But before we do that, let's just cut into SBI Chairman CS Sethi at the Stay conference.
Demand is there. I think a lot of people have approached us. I don't have the numbers right away, but I think there's a good demand coming.
Any particular sectors that are seeing more demand?
So I think across SMEs, predominantly SMEs who are taking the loans.
Sir, in the current geopolitical situation, यहाँ पर सर ये भी expect किया जा रहा है कि ECL norms में tweak हो सकता है उसके लिए सर क्या वो expected है क्या बैंक?
No, I'm not aware.
Can we get an assessment of the acquisition financing? What is the impact that you're seeing on?
No, currently, as we mentioned, I think we have not had any major impact on the asset quality so far, and we have to be watchful in terms of the lingering. Pardon?
Or demand?
And the demand of credit demand seems to be robust, and when compared to the year-on-year growth, we are seeing the growth continues to be robust across the segments. So we have not seen any demand constraint at this juncture, but we will have to see how the lingering impact of the recession.
So last time we checked on acquisition financing, you were in talks with Japanese lenders. What's the update?
Any possibility with
So
Citi as well?
we work with all foreign banks and Indian banks in terms of creating that collaboration for M&A financing. We did a couple of deals together already, so we are working on many other deals.
Are you assessing any proposals for
Yes, we already have. We've done one already, and first of all we put the system and also the team in place. The team is working now, and we have done one transaction. We are doing another one, and I'm sure that I think will play an important role. I think let's not get into the details.
Sir, share your expectations from the RBI monetary policy also, especially in the context of how crude has behaved, how currency has behaved, and the inflation fears.
So the expectations, I think broadly the market expects that there could be a rate pause at this juncture. Growth, inflation dynamics are more important. I think a pause will definitely help us to stabilize in terms of ensuring that the smooth growth rates are achieved.
So SBI AMC, is there a timeline yet for the IPO?
We hope to do sometime during this year.
Okay.
We are just waiting for the regulatory approvals. Calendar year.
Are you close to filing the...
we have already filed the DRHP, so we are waiting for the approval. Yes, we have filed the DRHP.
Yeah. And then would SBI General also follow next?
Yeah, we'll see that.
US ambassador expected, sir, what do you have to say on the US?
Got it. Well, and you know that important question there by our colleague Nimit there on the SBI AMC IPO as well as on the general one, of course, will be something to watch. But the DRHP filed, as CST spoke about as well. But let's take a very quick break. We'll resume all the questions on the other side with our guests.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns,
the hottest trends,
the smartest brand moves on our new show.
But wait, what do we call it?
The Hook.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
And the award goes to...
Hello and welcome back to NDTV Profit. You're watching Ask Profit, and if you haven't already, do start sending in your queries on the numbers that are flashing on the top of the screen. Now, we had CS30, of course, speaking to our reporter Nimit there as well at the City Conference, and we also have a query now on the stock. Kaushik from Baroda is holding on to 20 shares of SBI. He's bought it at 1,050 and wants to know if he should continue to hold for the long term as well or no. Gaurang, since he's bought it at 1,050, first a view on the stock, and second, if it's a good time to buy more at this point of time?
So Puneet, as a disclosure, again, we've been positive on SBI, and SBI happens to be one of the largest bankers to the nation, as we all know it, Puneet. And a slight bit of disappointment in the fourth quarter numbers in terms of treasury income, if I remember and recollect right. And because of that, there was a little bit of punishment on the stock. There was sell pressure, and sell pressure continues because the market's also down and out. Hold on to it. And Puneet, these are the corrections which actually should excite long-term investors to nibble into strong fundamental stocks from a long-term point of view. Hold on, and if you have investable amount, you can add an average as well.
Okay, all right. I think we've got Aruna calling us from Vijayawada. Aruna, a very good morning to you. Go ahead, ask your question. Hi Aruna, can you hear me? Okay, I think we seem to have lost the caller, but we do have her query. It's on Vimta Labs. She's bought 500 shares at the levels of 620. Vaishali, any view on the charts for Vimta Labs?
So I think the stock has shown good erosion and now signs of reversal. So I would say start buying the stock with support of 450, and near-term target we are looking at 550.
Got that view. The next one coming in now, it's from Royston from Maharashtra, and he's holding on to, or actually wants to actually buy REC for the long term. And what's the view? Gaurang, any coverage either on REC or PFC? Of course, the merger is impending, but any view on either of those stocks?
So Puneet, while we used to be positive on both, but since our target price was in place, we have not gone ahead with our coverage any longer, no coverage. But yeah, we remain extremely positive on the sector, that is power transmission and distribution and power equipments. And both these are well-defined players. And there is a news, I believe, Honorable Finance Minister said about merger of both these companies. But yeah, no coverage, so no specific comments.
Okay, the next one is on Bajaj Housing Finance. Our viewer, Kesav Rao from Andhra Pradesh, is holding 1,200 shares at the levels of 143. Wants to know as to whether he can continue to hold this counter further or book his losses. Vaishali, any view?
Well, I would say I don't have much of a data. Gaurang would be the better person to talk about.
Gaurang, any view on this one? Because from 143, it's now come to 83.
Yeah, I think this has been a drag and an underperformer, Mahima. But the only problem happened, I mean, we remain positive on the entire HFC, that is Housing Finance Companies, Mahima. Two recommendations are there, LIC Housing Finance and Canfin Homes. Despite of almost a decade after which we saw an IPO coming from the group, that is Bajaj, the stock is still under pressure. I believe it is below the IPO price as well, correct me if I'm wrong. So if you want a preference, LIC Housing and Canfin Homes are better options.
Got it, Gaurang. And yeah, it's been a very, very disappointing ride. Recovered from those lows of 77, 78 odd, climbed to 90, then back again at these levels of 84, and has been under pressure as well. But the next query coming in now, it's unfortunately on another disappointing stock performance post listing, and that's on ITC Hotels. Now, our viewer Suman from Kolkata is holding shares at 182. Wants to know if we should average out now and continue to hold for the long term. Gaurang, any coverage on this stock? What would you recommend?
So ITC was in the news for all the wrong reasons, unfortunately, Kritan. Because of the, not only ITC, but all these companies like VST and of course Godfrey Phillips, Puneet, because of the price hike. Then once again, we had price hike coming in for the smaller length of cigarettes. We remain positive on ITC from a long-term point of view. The stock got adjusted for dividend, if I'm not mistaken, Puneet, recently. Last week it was, if I'm not mistaken. And we are optimistic in the sense that other than having tobacco products and cigarette business, ITC's got couple of other businesses also. While the negative overhang is for companies like Godfrey Phillips and VST because of only focus business on tobacco products. Long term, continue to hold ITC.
Also, Gaurang, actually the query was more on ITC hotels. So if you have any view on that as well.
So hotel sector, we remain positive, but on ITC hotels, we don't have a coverage. Indian hotel is something that we are positive on. But there are a lot of capex, Puneet, that are lined up by various hotel companies, whether it is ITC, whether it is Indian Hotels, whether it is Chalet, whether it is Taj GVK, or whether it is Lemon Tree. We expect tourism to pick up on all fronts to a great extent.
All right, so that's the view coming in on the entire hotel space. The next one that we have is on, this is from Nidika from Pune, asking about Jio Finance. She's holding 550 shares at levels of 263 that she's kept from a long-term perspective. Whether she can continue to hold this or not, Gaurang?
So Jio Finance, again, Mahima, my sense, what I have observed since the time this company got hived off and listed as a separate entity, between 200 and 220, there are a lot of large investors who are looking at that. And there's been a couple of times in the past history since this company got listed, it goes to 200, 220, consolidates over there and then bounces back to about 275, 280, 300 plus levels. 350 is the target from a long-term point of view. Continue to hold on. If you got in at higher levels, you can add an average as well.
Got that view, Gaurang. But let's go across and take another caller now from Hyderabad. And Murli has a stock query for us. Murli, good morning. Welcome to the show. What's your query?
Good morning. Yeah, good morning. Good morning to all the panelists and you both. I have a query on Sirma SGS. I have right now about 20 shares at an average of 606.
Okay.
I sold about 20 shares and it reached 1,000 plus.
Okay.
So should I hold the remaining for another 1 year or so? I've been holding it for the last 3 years.
Well, Murli, firstly, many congratulations. You got it at a very good price. So you looked at the fundamentals or the technicals for Sirma SGS when you bought into it?
I looked at both and the company and the fundamentals of it, though it went into negative at times, but I hold it on assuming that it's a good company and it would bounce back.
Well, most certainly it did, Murli, and I think it went down to 425 since then. What a move for this counter in the last 12 months. Also, our stock has doubled. But let me get firstly a view from Vaishali. Vaishali, because you've seen rank outperformance from Sirma SGS, especially at a time when the EMS sector is under consolidation. Any view on the charts?
Oh, yes. I think it's a very good pick and it's doing very well. It should continue to do well. Even the monthly charts, they show a good upward move. So I would say please hold, no harm booking partial profit, but the rest one can hold for a target of around 1250 to 1300 levels.
All right, okay. We've got caller Seema who's calling us from Hyderabad. Seema, a very good morning to you. Go ahead, ask your question.
Hi. I'd like to add NTPC and Power Grid stocks. So can I know about them? Yeah.
Okay, Seema, got your question. Any time period that you're looking at to add both of these counters?
Short term.
Short term. All right, okay. Then I'll take this up with Vaishali. Vaishali, where are the charts more attractive? Is it NTPC or Power Grid?
Well, I would say right now market is showing some signs of weakness. So I would not really advise to trade, but I would say if you have to, I think Power Grid is showing more stability. 275 should be your stop loss and can go for the stock to look for a target of 295 to 300.
Got that view. Now, it's a stock we haven't discussed too much. KMC Specialty Hospital, the last 1 year chart has been very strong for this one. Ankit from Mumbai is actually holding shares at almost 87 rupees per share and holding 500 of those almost. So he's in the profits. Vaishali, I don't know if you track this. He wants a long-term view, but I'm guessing it's a very small company for Gaurang to track. But any view firstly on the charts, Vaishali, for KMC?
Sorry, I don't have this chart either.
Gaurang, I'm guessing it's too small, right, to cover at this point of time. If not, anything that you like in the hospital sector?
Yeah, it happens to be a very small company, Puneet. No specific coverage on this one, but the healthcare sector, Puneet. And I would add one more dimension to this particular sector, and that is the ongoing geopolitical situation and the boil in crude oil prices, energy prices. Hospitals, healthcare, to a certain extent, IT power generation remains insulated from the external shocks. We have 4 investment ideas in the healthcare category. Apollo Hospitals, Narayan Rudalaya, Fortis Healthcare and Max Healthcare. And on the numbers front, other than Max Healthcare, Puneet, other 3 delivered fantastic set of numbers. But we remain positive on these 3-4 names.
Okay. The next question that we have is on Bharat Dynamics. Nala Muthu from Chennai is asking about this particular counter. He's holding around 120 shares, an average price of I think 800 for the last 4 years, and he wants to know as to what should be the perspective from a long-term view. Gaurang, I'll stick with you for Bharat Dynamics. What's the view like?
So, Mahima, again, we remain positive on the sector. First of all, no specific comments on Bharat Dynamics since we don't have a coverage. But let me give an insight of the coverages that we have. Bharat Electronics Limited, Mazgaon Docks and MTAR Technologies. These are the 3 names on which we are coverage. And of course, one more private player, that is L&T. Bharat, and my view, personal view is, Mahima, that have 3 to 5 year time horizon, because these companies which are actively participating in defense, they take time to execute the order book because they are complex engineering, high technology, precise products. You can't afford to go wrong. And you have to make a prototype, then you have to get it through various tests, and then the mass scale production starts. So remain positive on the defense. Bharat Dynamics happens to be one of the strongest player in the defense, but no specific comments.
Got that view, Gaurang. But let's go across, take another caller now. And Vinod has a stock query for us. Vinod, very good morning to you. What's your query?
Yeah, good morning. I'm looking for a stock advice on Techno Electric and Rajesh Power, which both are SME power transmission EPC contracting companies. I'm looking for a 5 to 7 years horizon, preferably through a SIP route.
Got it, Vinod. Let me try and put those to Gaurang. Gaurang, Techno Electric, I think, we saw pressure post Q4 results, but any view on Techno Electric or Rajesh Power for the long term?
I'll give it a pass, no coverage.
Vaishali, on Techno Electric specifically, if you track the charts, because saw that massive 10% downtick post results, is there any momentum getting formed now on the charts?
So if you're talking about Techno Electric, well, there's nothing really happening. It's just consolidating. Since a very long time, it is just having a range of 950 to 1350. So follow these levels. Either way is a decisive move, give you a clarity.
Okay, all right. The next one that we have is from Amit, who's writing us from Mumbai. He's holding 1,000 shares of IndusInd Bank at the levels of 1380. He wants to know whether he'll ever be able to reach his cost price or not. And his query is valid also, right, Gaurang? He's been a patient investor sitting on a loss of almost 5 lakh rupees. What should he do?
So first advice is, Mahima, that don't let your capital erode.
Exactly.
60-70%, because then the recovery of your capital itself becomes a big question mark. Forget about making profit on your investments. Having said that, there are some news items recently which has actually played an overhang on IndusInd Bank, but we have a hold rating. I dare not say that he can average over here, but yeah, in case if he's got investable amount, then he can average some portion, since he got in at 1300 plus and the stock is trading at about 880, 890 odd levels. Hold an average, it may take a longer time. Patience will possibly pay off in terms of either narrowing your losses depending upon the quantity you average, or getting you a little bit of profit. I don't know if Vaishali has a view on this.
Got it, Gaurang. But next question coming in now, it's on Supriya Life Sciences. There's been another counter that was locked in upper circuit post results, and our viewer Mahesh actually holds shares at 678. So he's currently sitting on a profit, holding 15 shares. Let's look at the 1 week or the 1 month chart, and then you had that market correction over the last couple of days. So stock also tanked 10%. So it's been volatile to say the least in this week, up 13%, and you said a big jump post results at the end of last week, and then that downtick yet again. But Vaishali, it's performed well in the last 1 month. Would you recommend Mahesh to book profits? He's bought it at 678.
I would say so. Book partial profit because we've seen a good one-way run-up. But and if you're not in a hurry, I think follow a strict stop loss of 850 because this stock, the way it has consolidated, can show new round of momentum and perhaps retest the previous high. So 850 should be a stop loss and continue holding.
Okay, all right. The next one that we have is from Sunita, who's writing us from Delhi. She says she wants to invest 3 lakhs rupees in ICICI AMC and wants a short-term view, a 2 months view on this particular counter. Vaishali, this question is specifically for you.
So first of all, well, if you want to just trade, then I think follow strict rules, and I'll just give you the levels. Yes, so currently I think it is at 3270, and I think keep a stop loss of 3150. 2 month horizon can see a target of say 36,700.
Got that view, Vaishali, but let's go across, take another caller now from Telangana. And Anil has a stock query for us. Anil, good morning. Welcome to the show. What's your query?
Very good morning, everybody, sir. Thanks for connecting this call. So my query about I purchased Vedanta shares 1,000 rupees at the market price was 354.60 thousand shares.
Okay.
So can I expect 370, 380 next coming 1 month or 2 months?
Got it. Vedanta, Vaishali, we've seen the demerger and hence the price correction, but post that, there's still a lot of investor interest, right, on this one. Should he continue to hold? Should Anil continue to hold his shares at 364? What's your view?
So I think there's nothing wrong with this stock. We are seeing some corrective move and some profit booking. So if short term is the view, then hold with a stop loss of 320. If these levels break, then there could be a possibility of further profit booking coming to 300 levels. So 320 should be the final support stop loss and continue holding.
Okay, all right. The next one that we have is on MCX. Anjali from Kochi wants to know the short-term target on this one. Vaishali?
So MCX currently at 2818. I think it is also into a profit booking. The near term, I think it can go towards 2600 levels.
The next question coming in now is from Venkat from Chennai, and he's holding on to L&T Finance, which he's bought into it at 270 and holding about 100 shares here. And he's asking if he should continue to hold this counter, buy more or sell out. Gaurang, any coverage on L&T Finance? I think you gave a view on some housing finance companies that you hold, but any specific view on L&T Finance?
Sure. So we do have a positive coverage. And Punita, my sense is that despite of the headwinds and the concern in the near term as far as the entire BFSI segment is concerned, of course, there is also opinion that the credit policy that is due this week, there's going to be a status quo. Let's wait and watch what the governor has in mind and what is recommended by the MPC committee. But on L&T, yeah, we do have a positive coverage. And my sense is that after hiving off certain businesses which were not productive and did not contribute to a great extent, the balance sheet has become much leaner and cleaner. Long term, continue to hold L&T Finance.
All right, okay. The next one is on Balaji Amines. Neha from Bengaluru is holding 30 shares at the levels of 1481. Wants to know the target and stop loss from a 3 months perspective. Vaishali, yesterday's gain and today's gain combined together, it's gained around that 20% mark. And this is on account of the price hikes that that it saw, right? So any view on the charts? Do you think there's more steam left?
I would say so. If 3 months is the horizon, in fact, even on a weekly chart, it's showing good bullish candle right now. Though for the near term, we have seen a good run up already coming in. So I would say continue holding, but the stop loss comes at 1600. So that's your call as to would you want to hold with such a low stop loss. But I think the projected targets for 2 to 3 months, I won't be surprised if this goes to 2400 to 2600. So stock accordingly.
Got that view, Vaishali. So definitely, we put out the story yesterday in India Market Close about what's happening in the Ameen space as well. So probably that's what's leading the momentum there. But next question is from Battu from Hyderabad, and he's holding on to Escorts, which he's bought at 2970. Now he's holding on to 253 shares. But Gaurang, Very interestingly, though, we've seen that last year was a record year for the tractor industry, crossing that 1 million sales mark for the industry. But the April and May numbers are also not too bad, right? What would you recommend here if you have a direct view on Escorts, or what do you recommend for Bhattu to do?
He's got a nice name.
That's why I took it twice.
So I believe Escorts Kubota is what the stock we are talking about. And the entire tractor, earth moving equipments, farm and agri equipments, which Escorts Kubota is into. Excited about it. Yeah, I mean, deficit monsoon may create a little bit of headwinds in the immediate short to medium term. But if you're a long-term investor, continue to hold on. We have a buy coverage as a disclosure. So, and if you got in at higher level, if you have investable amount, you can continue to add and stay invested. Target price, very attractive. And the downside looks protected. And targets are somewhere close to about 3,800.
Okay, wow, 3,800 targets for Escorts Kubota. That's what Gaurang is predicting. But, let's start a rapid fire round. And Gaurang and Vaishali, you both know the drill. The first question that we have is from Ajay, who's writing us from Bengaluru, asking about Aeroflex Industries. He's bought at the levels of 345,000 shares is what he's holding. Vaishali, on the charts. Aeroflex Industries.
Aeroflex, yes. So right now it is showing some momentum. It can go towards 460. Hold.
Got it. On Sandhar Tech, Neelam from Jaipur is holding shares at 441. Gaurang, we had the management come and say that they're expecting FY27 to be one of their best years. Any view on the stock or anything that you like in the auto component space now?
So yeah, I mean, this is a very strong player, Puneet. No specific coverage since we don't have one. But we like Uno Minda, CIE Automotive, JK Tire, Apollo Tire, Balkrishna Industries, Oxide Industries, Amara Raja Mobility.
All right. The next one is on Kansai Nerolac. Akhil from Pune is holding 60 shares, bought at the levels of 163 from a 2-year perspective. Continue to hold. Gaurang?
Kansai Nerolac, yeah, I mean, paint happens to be one of the sectors which are affected by the ongoing geopolitics. Long term, continue to hold. We have positive coverage.
Signed DLM bought at 605 by Bhaskar. Vaishali wants to know what should he do with his 80 shares now?
Currently 455, hold. Look for a target of 500, 520.
KC International from a long-term perspective, is it a good time to enter? Saurabh wants to know this. Gaurang?
So we are positive on KC International. Mahimad, the only problem was the numbers were a disaster. Let's be very honest to ourselves. But long term, being a small to mid cap cap goods engineering play, we remain positive. Continue to hold and add as well.
Got the view, Gaurang. On NTPC Green, Dr. Ravi Shankar is holding shares at 98. Wants to know, Vaishali, if he should exit now or continue to hold. I know it's a very recent listing, but any view?
Keep a stop loss of 95 and hold, because this can go towards 120, 130.
Okay, Bharat Electronics bought at the levels of 430. Can I continue to hold? Prem from Hyderabad is asking. Vaishali?
I think keep a stop loss because near term is a bit bearish. So keep a stop loss of 400.
Next one's from Nikit from Bangalore. He wants to know if it's the right time to buy into Aether Energy. What would you recommend? Vaishali has seen a very strong run up.
Buy and dip.
Jupiter Wagons, a 2-year plus view from a long-term perspective. Ashish from Delhi wants to know, Gaurang.
Well, this also happens to be a play in the Indian Railways and has recently secured orders. No specific comments, no coverage.
Rajesh from Hyderabad wants to invest in an auto ancillary company. I think, Gaurang, you gave quite a bunch of a list, but his question is also on Sansera Engineering, if it's on your radar.
Not on the radar, but happens to be a decent player in the auto ancillary pack.
Okay, Bank of India, 100 shares bought at the levels of 91. Murli from Hyderabad wants to know, from a long-term perspective, is this a good hold, Gaurang?
We have a positive coverage on Bank of India, continue to hold.
On Senco, Vaishali, how do the charts look right now is what Jaya from Bangalore is asking.
Senco Gold, that is 343. Nothing happening for now. It needs to cross 360 to show some strength.
Tejas Networks bought at the levels of 481, 20 shares. What's the short-term view on this one, Vaishali?
So this has shown good momentum and this can go towards, I think, 600 for short-term perspective.
On Welspun Living, also Vaishali, our viewers bought shares at 127, asking if it's a good time to book out right now. Certainly in some profits, what would you recommend?
So, well, if time is not a problem, continue holding. This can go towards 160, but also hold with a stop loss of 135. And if it's a short-term period, then do book.
Got it. Well, that was the last query on this edition of Rapid Fire. Gaurang as well as Vaishali, thanks so much for helping us solve a lot of queries today. 60 of those that we have across stocks and spaces. So thanks so much for your inputs today. But viewers, out of time on this edition of the store. Stay tuned. A lot more action on the other side, and we'll see you at 2 p.m. for Ask Profit, the afternoon edition.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of real. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Hello and
welcome to KYC. I'm Sharad Dubey and you are watching NDTV Profit. This is the show where I get you the hottest companies, what's the story behind it, and interestingly, will there be any alpha made or not? So let's start with the company in focus today. That would be definitely there, but I'll give you some hints. Try to guess it. It's India's third largest manufacturer of magnetic winding wires. And if you look at the export angle also, that's also very strong. The company delivered with a very strong operational numbers, and it was recently listed also. Let's see the date. What's there? Of course, it's backed by Malabar Investments as well. Try to guess the company. This was listed on December 23rd, 2025, near that Christmas Day period. Interesting. But the stock has given a solid returns, up 113%. Stock double हो चुका है IPO प्राइस से. लेकिन ये स्टॉक है क्या? ऐसे खराब बाजार में इस स्टॉक में अच्छी रिटर्न्स? Which stock is this? The stock in focus is KSH International. The company is coming for the first time in KYC, and we'll try to decode what this company is all about, what's the outlook ahead, and why did the numbers come so strong in Q4. But a lot of questions are there. Let's try to answer them one by one. Why are we calling this company? Strong growth outlook for FY 27-28. Will this sustain? Because 4 quarter numbers were strong, and that is where we'd like to see the momentum in this counter. Also, the second question, the views on exports and specialized wire segment. The management has explicitly stated in their press release that these are the growth levers. Let's try to understand more about the demand trends in the client confidence, especially on the client onboarding front, and also how the raw material prices are jumping, and is there any pass-through mechanism, because the company definitely has a lot of raw materials tied up to metals and minerals. The utilization numbers of the factory and the capex plans, what are the numbers looking like for the next 2 odd years. Also, we'll be looking at the future product mix as the company is pushing towards the value added segment. Apart from this, another important question is there any execution risk, because monsoon is nearby in their industry? There is at times execution risk or lumpiness as well. And to explain this entire process, we'll have Rajesh K. Hegde. He's the MD at KSH International, where we'll ask a lot of questions for Rajesh. But let's try to understand the company first. This company karti kya hai? First and foremost, I would like to point out 2 important portions. The company was founded in 1981. It's India's third largest manufacturer of magnetic winding power and also the largest exporter. So definitely their revenue mix is pretty interesting. They provide ultra precision, special and standard magnet winding wires to OEMs. So that is something to watch out for. But where does the wire go? It's in the power, renewables, railways, motors for the EV and the ICE, internal combustion engine segment. So they are catering to a lot of industries. Also for industrial, there is home appliances, compressors and refrigerators as well, where most of their wiring solutions are there. Now they have 4 manufacturing facilities which are located in Maharashtra. Apart from this, also the key factor to watch out for is the total annual capacity. Look at that, it's around 43,445 million tons per annum. So that is something we'll be watching out for. And interestingly, 2.45% stake is held by Malabar Investments. 70% capacity utilization is there in the 4th quarter. Also, let's look at the other key triggers for the stock. FY26 EBITDA per ton stood at 67,625. Compare that with the numbers last year, it was 52,356 rupees per share. Also, let's look at the segmental revenue mix. The specialized segment that is still there, value added margin is higher. It's around 75% of the margins. Compare that, it's around 25% for the standard wires which we are talking about. Apart from this revenue mix, the key clients, very big names are there. BHEL, CG Power, Hitachi Energy, Bharat Bijli, ABB, Bosch. So you can say technically it is a power ancillary company, and this is why the entire sector has been seeing a lot of strong, you could say, tailwinds, and it's an approved supplier to Power Grid, NTPC, NPCIL and RDSO. So definitely the company's credentials are pretty strong. But how was the fourth quarter? The first question is strong volume growth coming in, and the mix is also good. Higher copper prices were also there. So we need to understand what's the pass-through mechanism for them. The volumes increased by 29% on a year-on-year basis. So that is showing strength. Apart from the volumes also, there's specialized magnet winding wires. That's the revenue going up by 103%. And if you look at the exports, that has also gone up by more than 92%. Apart from this, the Q4 performances, what's working for the stock, more reasons than what's not working. Strong growth outlook for the exports and the specialized wires, ये management ने कहा है. And apart from this, the improvement is coming in the working capital ratios by a little number of days, but nevertheless, it's very strong. Debt equity ratio, that has healthily come down. Of course, post the IPO, they've used that to reduce the debt. It stands at 0.39x. Also, apart from this, the strong customer confidence has come in, especially during these uncertain times. The customer onboarding has been strong. That's what the management had stated. So definitely this looks like a positive point. But what's not working? H1 FY27 might be impacted due to rising costs, and this is for the entire industry. Pricing pass-through for the mechanism, that needs to be seen how the company is able to do it, because let's be honest, March quarter hasn't taken the major hits because every situation happened at the last week of March. Execution risk of large power projects remains a key risk. So these are the reasons where my entire analysis is coming in, and the run-up which has happened from the IPO, because of that the valuations may not be reasonable for right now. But let's talk about the rating parameter. What do we want to give to the company? But before that, let's give in the total numbers to actually check out. This includes income statement, balance sheet, cash flow, and of course the ROC, ROE numbers also for the company. I've also taken the shareholding pattern and the street cred, but remember the company was listed just last year on December 23, so the data is quite less. Operational parameters I've taken in terms of valuations, but I have flagged that the valuations are not cheap for the stock, and the outlook ahead. What are the numbers, or what is the company expecting going ahead? But let's start with the first one. That one is your income statement, and look at that growth. Last 3 years CAGR, the stock has been going more than 50% up. Perhaps it's justifying its premium valuation right now. 63% of top line and operational growth in the 3 year CAGR numbers. Even the Q4 numbers, if you look at it, they also have shown strength. If you could just pull out the Q4 numbers to show what the growth is on a year-on-year basis, be it revenue, EBITDA or net profit, most of them have doubled up, the top line and the bottom line. Let's have a look on the margins, what has happened, and I feel margins has taken a little bit of hit. It was going comfortably above that 6% mark, but now it's at 5.5%. So we'll try to understand why the margin pressure and will this continue going ahead or not. But net, I could say this is a strong thumbs up when it comes to the income statement. Up next is balance sheet. I mentioned to you earlier that the debt levels are on the lower side, and that's what I'm talking about. The balance sheet has done well. The cash levels have gone up. Look at that, it's around 84 crore rupees, and net worth seems good as well. So all in all, a good balance sheet management. So I'm going to give this a thumbs up as well. So we spoke about income statement, we spoke about balance sheet. Let's look at cash flow. Is there any lumpiness in this business model, or this just a neutral way of looking at things? And yes, things have improved. The EBITDA number has improved and the company has turned net cash flow positive. But there is lumpiness in this industry, and I want to be fair in my rating. So I'm going to give this a neutral rating for the cash flow segment. Let's pull out the return ratios and see what happens. And largely, the ROC numbers is something to track. It's around 13%. It went at a peak of 17%. Slight cool off at 16%, but nevertheless, it's a 15% plus ROE business. Return ratio, same story happens here for the ROE numbers also. It's comfortably at the 20% mark. So net, it's a very solid return ratios for a business model like that, but a little bit of moderation has come. So that is where a little bit of question comes for me going ahead. So I'm going to give this a neutral rating. Okay, So this is pretty much interesting. We'll just take a quick break. Out of the break, we'll be coming back with more details.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated.
That's it. That's what we're looking for.
The best campaigns.
The hottest trends.
The smartest brand moves on our new show.
But wait, what do we call it?
The hook.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editors.
Welcome back to KYC, and of course we are talking about the KYC rating parameters, and let's go on to the next one, that is the shareholding segment. Of course, largely the promoter stake has been, you could say, neutral around 75%, but one thing which I liked was the FIDI. They have increased the stake partially from 4% to 5% for FIs, and for DIs this number is around 13 to 14%. So that's pretty interesting as well. So I'm going to give this a thumbs up as well. Also in the street cred, we are having the stock's reaction. From the IPO price, the stock is up 113%, and look at that, from the listing price the stock also jumps 121%. So the stock has made money if you have invested in the company or even after that. But let's look at the operational parameters, what is there. I have taken EBITDA per turn and sales volume per turn, and look at that, the operational numbers are pretty strong and a good jump, both YOY basis as well as a sequential basis. So I'm going to give this a thumbs up as well. Let's talk about the outlook, how things pan out, and largely you need to take this thing with a pinch of salt. The company wants to exit FY27 with an installed capacity of almost 59,000 million tons. Good execution momentum is something which they have spoken about, and the increased demand for export products and the special segment in the new countries is something which they are looking out for. Now they have signed up new domestic OEM customers for standard wire products and also diversifying the business to leverage the new growth market. So it's a neutral rating right now because of uncertainty coming in. But let's try to recap what are the important KYC ratings coming in. Income statement, balance sheet has been quite strong. On the other hand, the street cred and shareholding, if you look at it, largely the stock has given good returns post IPO as well. Operational parameters have been strong, and so has the interest amongst the institutions. So net on the higher side of the average earnings which I gave in the KYC segment, the company gets 6.5 out of 8. So that is a really solid